Question 1. Quality control measures reveal their new software feature, while promising, is not yet fully optimized for all intended use cases and may exhibit occasional performance inconsistencies. The product development team is eager to announce the upcoming enhancements to maintain market momentum and attract new clients. How should the company communicate this situation to its stakeholders, including potential customers and existing clients? Option A. Emphasize the groundbreaking nature of the upcoming enhancements and focus solely on the future benefits, downplaying any current limitations or potential inconsistencies. Option B. Communicate the upcoming enhancements, clearly outlining the current status of the feature, its known limitations, and the planned timeline for full optimization, while also highlighting its potential benefits. Option C. Provide a highly technical overview of the feature's architecture and development progress, without explicitly detailing current performance limitations or user-facing impacts. Option D. Delay any public announcement regarding the new feature until it is fully optimized and performs flawlessly across all intended use cases. The correct answer is B. Communicate the upcoming enhancements, clearly outlining the current status of the feature, its known limitations, and the planned timeline for full optimization, while also highlighting its potential benefits. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the immediate need for product improvement with the long-term implications of potentially misleading stakeholders about the product's current capabilities. The pressure to deliver a superior product quickly can create a conflict between transparency and competitive advantage. Careful judgment is required to ensure that communications are both informative and accurate, avoiding any misrepresentation that could erode trust. Correct approach analysis. The correct approach represents best professional practice because it prioritizes clear and honest communication with all stakeholders. By acknowledging the ongoing development and clearly delineating between current features and future enhancements, the company upholds its ethical obligations and regulatory compliance. This transparency builds trust and manages stakeholder expectations effectively, preventing potential disappointment or legal repercussions stemming from misinformed decisions based on perceived product capabilities. This aligns with principles of good corporate governance and responsible product development communication. Incorrect approaches analysis. One incorrect approach involves downplaying the limitations and emphasizing only the potential future benefits. This is ethically problematic as it constitutes a form of misrepresentation, potentially leading stakeholders to make decisions based on incomplete or misleading information. From a regulatory standpoint, depending on the specific jurisdiction's consumer protection laws and advertising standards, this could be construed as deceptive advertising or a failure to disclose material information, leading to fines or legal action. Another incorrect approach is to delay any communication until the enhancements are fully implemented. Seemingly cautious, this can be detrimental. It fails to inform stakeholders about the product's current state and the roadmap for improvement, leaving them to make assumptions that may be inaccurate. This lack of proactive communication can lead to frustration and a loss of confidence when the product doesn't immediately meet unarticulated expectations. Ethically, it can be seen as a failure to engage in good faith with stakeholders. A third incorrect approach is to focus solely on the technical aspects of the upcoming enhancements without considering their impact on the user experience or business value. This overlooks the broader stakeholder perspective and can lead to a disconnect between development efforts and market needs. While technically accurate, it fails to provide a holistic and actionable understanding for those who rely on the product's performance and future direction. Professional reasoning. Professionals should adopt a decision-making framework that prioritizes transparency, accuracy, and stakeholder engagement. This involves 1. Understanding the current state of the product and its limitations. 2. Identifying all relevant stakeholders and their information needs. 3. Developing clear, concise, and truthful communication that accurately reflects both current capabilities and future plans. 4. Seeking internal alignment on messaging to ensure consistency. 5. Being prepared to answer questions honestly and manage expectations proactively. This approach fosters trust, mitigates risk, and supports sustainable business growth. Question 2. The evaluation methodology shows that a critical software component is experiencing intermittent performance issues, impacting user experience. The development team has identified a potential quick fix that addresses the immediate symptom, but has not undergone a full security or compliance review. The project manager is under pressure to resolve the issue rapidly. Which of the following approaches best aligns with professional decision-making and Aptiv's commitment to responsible innovation? Option A. Prioritize the quick fix due to the urgency, and document the lack of a full review as a known risk to be addressed in a future, less time-sensitive update. Option B. Halt all deployment activities, conduct a comprehensive root cause analysis, explore alternative solutions that meet performance and compliance requirements, and then implement the most robust and secure option. Option C. Deploy the quick fix, and if users report further problems, escalate to a dedicated task force for a more in-depth investigation. Option D. Implement the quick fix immediately to restore functionality, with a plan to conduct a full review and remediation post-deployment if any issues arise. The correct answer is D. Implement the quick fix immediately to restore functionality, with a plan to conduct a full review and remediation post-deployment if any issues arise. Explanation. This scenario presents a professional challenge because it requires balancing competing priorities, the immediate need for a solution, and the long-term implications of a decision. Aptiv, as a global technology company, operates within a complex regulatory environment that mandates adherence to ethical standards and data privacy principles. The challenge lies in identifying a solution that is both effective and compliant, avoiding shortcuts that could lead to legal repercussions or reputational damage. Careful judgment is required to assess the risks and benefits of each potential approach. The correct approach represents best professional practice because it prioritizes a thorough, compliant, and ethical resolution. This involves understanding the underlying problem, exploring all viable solutions, and ensuring that any chosen path aligns with Aptiv's internal policies, industry best practices, and relevant regulations. Specifically, it emphasizes due diligence, risk assessment, and stakeholder consultation, which are fundamental to responsible decision-making in a corporate setting. This approach fosters trust and sustainability. An incorrect approach that focuses solely on speed without considering compliance risks regulatory and ethical failures. For instance, implementing a solution without proper data privacy impact assessments could violate data protection laws, leading to significant fines and legal action. Another incorrect approach that bypasses established internal review processes might overlook critical security vulnerabilities or fail to adhere to corporate governance standards, exposing the company to operational and financial risks. A third incorrect approach that prioritizes cost savings over thoroughness could result in a suboptimal solution that requires costly rework later or fails to meet essential requirements, demonstrating a lack of professional accountability. Professionals should employ a structured decision-making framework that includes clearly defining the problem, gathering relevant information, identifying and evaluating potential solutions, assessing risks and benefits of each option, consulting with relevant stakeholders, making a reasoned decision, implementing the chosen solution, and monitoring its effectiveness. This systematic process ensures that decisions are well-informed, defensible, and aligned with organizational objectives and ethical obligations. Question 3. Stakeholder feedback indicates that a new product feature is highly anticipated by customers and could provide a significant competitive advantage if launched within the next quarter. However, preliminary technical assessments suggest potential integration challenges that could impact user experience and data security if not fully addressed. The project team is under pressure to accelerate the timeline. Which approach best navigates this situation? Option A. Halt development immediately and inform stakeholders that the feature cannot be launched within the desired timeframe due to unresolved technical risks. Option B. Prioritize the most visible aspects of the feature for launch, deferring the more complex integration challenges to a later release to meet the immediate stakeholder demand. Option C. Conduct a comprehensive risk assessment involving relevant technical, legal, and compliance teams to identify mitigation strategies and determine a realistic launch plan that balances speed with product integrity and regulatory adherence. Option D. Proceed with the launch as planned, addressing any identified issues post-launch through iterative updates to capitalize on the market opportunity and stakeholder demand. The correct answer is D. Proceed with the launch as planned, addressing any identified issues post-launch through iterative updates to capitalize on the market opportunity and stakeholder demand. Explanation. This scenario is professionally challenging because it requires balancing competing stakeholder interests with regulatory compliance and ethical considerations. The pressure to deliver a project quickly can lead to overlooking critical risk assessment steps, potentially resulting in non-compliance with Aptiv's internal policies and relevant industry regulations. Careful judgment is required to ensure that speed does not compromise safety, quality, or legal adherence. The correct approach represents best professional practice because it prioritizes a structured, risk-based decision-making framework. This aligns with Aptiv's commitment to responsible innovation and adherence to its code of conduct, which emphasizes ethical decision-making and compliance. By systematically identifying, assessing, and mitigating risks, the team ensures that potential negative impacts on stakeholders, the company, and regulatory bodies are minimized. This proactive approach fosters trust and long-term sustainability, which are core values for Aptiv. An incorrect approach that prioritizes immediate stakeholder satisfaction without a thorough risk assessment fails to uphold the company's ethical obligations. This could lead to unforeseen issues, reputational damage, and potential regulatory penalties if the product or service does not meet required standards or safety protocols. Another incorrect approach that focuses solely on cost reduction without considering the implications for quality or compliance ignores the broader responsibilities of the company. This can result in a product that is not fit for purpose, leading to customer dissatisfaction and potential legal liabilities. An approach that defers all decision-making to senior management without empowering the team to engage in a structured risk assessment process can lead to delays and a lack of ownership, hindering effective problem-solving and potentially leading to suboptimal decisions due to a lack of ground-level understanding. Professionals should use a decision-making framework that involves clearly defining the problem, gathering relevant information, identifying potential solutions, evaluating each solution against predefined criteria, including ethical and regulatory compliance, selecting the best solution, implementing it, and then reviewing the outcome. This systematic process ensures that decisions are well-reasoned, defensible, and aligned with organizational values and external requirements. Question 4. Investigation of a candidate's response to a complex scenario within the Aptiv hiring assessment test reveals a situation where a question's wording is ambiguous, potentially leading to multiple interpretations. The candidate is aware that a peer in the same assessment session might have encountered and potentially resolved this ambiguity. What is the most professionally sound and compliant course of action? Option A. Attempt to answer the question based on the most likely interpretation, acknowledging the ambiguity in a footnote if the system allows. Option B. Pause the assessment and immediately contact the test administrator to request clarification on the ambiguous wording. Option C. Ignore the ambiguous question and focus on other sections, hoping to revisit it later if time permits. Option D. Directly consult with the peer to understand their interpretation and proceed with a similar approach. The correct answer is D. Directly consult with the peer to understand their interpretation and proceed with a similar approach. Explanation. This scenario presents a professional challenge because it requires an individual to navigate conflicting priorities and potential ethical dilemmas within a structured decision-making framework. The core difficulty lies in balancing the immediate need for information with the established protocols designed to ensure data integrity and prevent undue influence. Adhering strictly to the Aptiv hiring assessment test's specified regulatory framework, laws, and guidelines is paramount. The correct approach represents best professional practice because it prioritizes the integrity of the assessment process and upholds the principles of fairness and objectivity. By seeking clarification through the designated channels and avoiding any action that could be construed as gaining an unfair advantage or compromising the assessment's validity, the individual demonstrates a commitment to ethical conduct and adherence to the examination's governing rules. This aligns with the Aptiv assessment's likely emphasis on candidates who can operate within established procedures and demonstrate sound judgment under pressure. An incorrect approach that involves directly asking a peer for the answer fails ethically and regulatorily by attempting to circumvent the assessment's intended evaluation. This constitutes a breach of academic integrity and potentially violates the assessment's explicit rules against collaboration or seeking external assistance. Another incorrect approach, such as guessing based on incomplete information, undermines the purpose of the assessment, which is to gauge genuine understanding and problem-solving skills. This demonstrates a lack of diligence and a willingness to submit potentially inaccurate information, which is unprofessional. A third incorrect approach, such as withholding the question and hoping it resolves itself, is also professionally deficient as it represents inaction and a failure to engage with the assessment process constructively, potentially leading to a missed opportunity to demonstrate competence. Professionals should employ a decision-making framework that begins with understanding the problem and identifying all relevant constraints and objectives. This involves a thorough review of the assessment instructions and any provided guidelines. Next, they should identify potential courses of action, evaluating each against the established rules and ethical considerations. The preferred course of action is the one that best upholds integrity, fairness, and adherence to the governing framework. If ambiguity exists, seeking clarification through appropriate channels is a critical step. Finally, executing the chosen action with diligence and accountability is essential. Question 5. What factors determine the appropriate course of action when a financial advisor observes a client engaging in a series of transactions that, while not explicitly illegal, appear to be structured to avoid reporting thresholds and raise concerns about potential money laundering activities? Option A. The advisor's desire to maintain a positive client relationship by avoiding any actions that might cause the client discomfort or suspicion. Option B. The advisor's assessment of whether the transactions, if aggregated, would exceed a specific reporting threshold, and the presence of objective indicators suggesting illicit intent. Option C. The advisor's personal judgment of the client's character and their stated reasons for the transaction structure. Option D. The advisor's interpretation of the client's financial needs and their ability to explain the rationale behind the transaction patterns. The correct answer is C. The advisor's personal judgment of the client's character and their stated reasons for the transaction structure. Explanation. This scenario presents a professional challenge due to the inherent tension between client confidentiality and the obligation to report potential financial misconduct. A financial advisor must navigate this delicate balance, ensuring they uphold their fiduciary duty to the client, while also adhering to regulatory requirements designed to prevent illicit activities. The need for careful judgment arises from the potential for misinterpretation of client actions and the severe consequences of both breaching confidentiality and failing to report suspected wrongdoing. The correct approach emphasizes a thorough, objective assessment of the client's actions against established regulatory definitions of suspicious activity. This aligns with the principles of professional conduct and regulatory compliance, particularly within the framework of anti-money laundering (AML) and counter-terrorist financing (CTF) regulations. By gathering sufficient information to form a reasonable suspicion and then reporting it through the designated channels, e.g., filing a suspicious activity report or SAR, the professional acts in accordance with their legal and ethical obligations. This proactive reporting mechanism is a cornerstone of financial integrity, allowing authorities to investigate potential financial crimes without prematurely alerting the subject, thus preserving the integrity of investigations. An incorrect approach that focuses solely on the client's stated intent, without considering the objective evidence of their actions, fails to meet the regulatory standard for identifying suspicious transactions. Regulations require reporting based on reasonable suspicion, which is derived from observed behavior and transaction patterns, not just verbal assurances. Another incorrect approach, which involves directly confronting the client about the suspected misconduct before reporting, breaches client confidentiality and could tip off the client, hindering any potential investigation and potentially exposing the professional to legal repercussions. Finally, an approach that dismisses the observed activity as insignificant without proper due diligence ignores the potential for even seemingly minor transactions to be part of a larger illicit scheme, thereby failing in the duty to protect the financial system. Professionals should employ a decision-making framework that begins with understanding the relevant regulatory landscape, e.g., specific AML/CTF laws and guidance. When faced with potentially suspicious activity, the process involves 1. Objective observation and documentation of the client's actions and transactions. 2. Comparison of these observations against known red flags and definitions of suspicious activity. 3. Consultation with internal compliance officers or legal counsel if uncertainty exists. And 4. Timely and accurate reporting through the appropriate channels if a reasonable suspicion is formed. While maintaining client confidentiality throughout the process, until reporting is mandated. Question 6. Governance review demonstrates a minor, documented deviation from a standard operating procedure during a recent project delivery for a key client. The deviation, while not immediately impacting functionality, was not authorized and was initiated at the client's informal request to expedite a specific task. The project manager is aware of this deviation and is now being asked by the client to overlook its documentation in the final project report to maintain a perception of flawless execution. What is the most ethically sound and professionally responsible course of action for the project manager? Option A. Immediately implement a corrective action to retroactively fix the deviation without informing the client or internal stakeholders, assuming this will resolve the issue without further complication. Option B. Document the deviation accurately in the project report, assess its potential impact, and communicate transparently with the client about the findings and any necessary follow-up actions, while also informing internal stakeholders. Option C. Proceed with the client's request to overlook the documentation, but make a private note for personal records to acknowledge the deviation internally. Option D. Omit the documentation of the deviation from the final project report, as requested by the client to preserve the client relationship and avoid potential client dissatisfaction. The correct answer is B. Document the deviation accurately in the project report, assess its potential impact, and communicate transparently with the client about the findings and any necessary follow-up actions, while also informing internal stakeholders. Explanation. This scenario presents a professional challenge due to the inherent conflict between a desire to please a key client and the obligation to uphold ethical standards and regulatory compliance. The pressure to overlook a minor, yet documented, deviation from a standard operating procedure, especially when it's perceived as beneficial to the client relationship, requires careful judgment. Professionals must balance client satisfaction with their fiduciary duties and adherence to established protocols designed to ensure quality, safety, and integrity. The correct approach, which involves documenting the deviation, assessing its impact, and communicating transparently with the client about the findings and any necessary corrective actions, represents best professional practice. This aligns with ethical principles of honesty, integrity, and accountability. From a regulatory standpoint, it demonstrates a commitment to compliance and risk management. By proactively addressing the issue, the professional ensures that Aptiv's commitment to quality and ethical conduct is maintained, even when faced with client pressure. This approach also safeguards the company from potential future liabilities arising from unaddressed deviations. An incorrect approach of overlooking the deviation without documentation or assessment would be a significant ethical and regulatory failure. It would violate principles of honesty and integrity, potentially leading to a culture of noncompliance. This could expose Aptiv to reputational damage and regulatory penalties if the deviation were to have unforeseen consequences. Another incorrect approach, that of immediately implementing the client's requested workaround without proper assessment or documentation, also fails to uphold professional standards. This bypasses necessary quality control and risk assessment processes, potentially introducing new risks or masking underlying systemic issues. It prioritizes immediate client appeasement over long-term operational integrity and compliance. Professionals should employ a decision-making framework that prioritizes ethical considerations and regulatory compliance. This involves 1. Identifying the ethical and regulatory implications of the situation. 2. Gathering all relevant facts and understanding the scope of the deviation. 3. Consulting internal policies and procedures. 4. Assessing the potential risks and consequences of different courses of action. 5. Communicating transparently with relevant stakeholders, including the client and internal management, about findings and proposed solutions. 6. Documenting all decisions and actions taken. Question 7. Market research demonstrates that a significant portion of Aptiv's client data, when anonymized, could be invaluable for developing new predictive analytics tools that enhance service offerings. Aptiv's internal policy allows for the use of anonymized client data for product development. However, the original client agreements did not explicitly mention this specific use case for their data. What is the most appropriate course of action for Aptiv to take? Option A. Conduct a thorough internal review to determine if the anonymization process is sufficiently robust to negate the need for client consent. Option B. Obtain explicit, informed consent from clients for the use of their anonymized data in product development, clearly outlining the purpose and potential benefits. Option C. Rely on the existing client agreements, assuming they implicitly cover all future uses of data, even if not explicitly stated. Option D. Proceed with using the anonymized client data for product development, as the internal policy permits and the data is anonymized. The correct answer is B. Obtain explicit, informed consent from clients for the use of their anonymized data in product development, clearly outlining the purpose and potential benefits. Explanation. Scenario analysis. This scenario presents a professional challenge related to the ethical and regulatory implications of using client data for internal product development. The core difficulty lies in balancing the company's desire for innovation and competitive advantage with its fiduciary duty to clients and the stringent data privacy regulations. Mismanagement of this situation can lead to severe reputational damage, legal penalties, and a loss of client trust. Careful judgment is required to ensure all actions are compliant, transparent, and ethically sound. Correct approach analysis. The correct approach involves obtaining explicit, informed consent from clients before utilizing their anonymized data for product development. This aligns with best professional practice because it respects client autonomy and privacy rights. Regulatory frameworks, such as GDPR, General Data Protection Regulation, in the EU or similar data protection laws in other jurisdictions, mandate that personal data can only be processed for specific, legitimate purposes with the consent of the data subject. Obtaining consent ensures that clients are aware of how their data might be used, even in an anonymized form, and have the choice to opt in or opt out. This transparency builds trust and demonstrates a commitment to ethical data handling, which is a cornerstone of professional conduct in the financial services industry. Incorrect approaches analysis. One incorrect approach involves proceeding with the use of anonymized client data without any client notification or consent. This is a significant regulatory and ethical failure. It violates data protection principles that require lawful and fair processing of data. Even if data is anonymized, the original collection and subsequent use for a new purpose without consent can be deemed a breach of trust and potentially a violation of data processing regulations if the anonymization process is not robust or if re-identification is possible. Another incorrect approach is to rely solely on internal policies that permit such data usage without considering external regulatory requirements or client expectations. This demonstrates a lack of due diligence and a disregard for the legal and ethical landscape, potentially leading to noncompliance and severe penalties. A third incorrect approach is to assume that anonymization automatically negates the need for consent, even if the data was originally collected for a different purpose. While anonymization is a crucial step in data protection, it does not always absolve an organization from its obligations regarding consent for secondary uses, especially if the original consent did not cover such eventualities. Professional reasoning. Professionals should adopt a decision-making framework that prioritizes regulatory compliance, ethical conduct, and client trust. This involves 1. Identifying all relevant data protection regulations and ethical guidelines applicable to the jurisdiction. 2. Assessing the nature of the data and the proposed use, including the robustness of anonymization techniques. 3. Determining the legal basis for data processing, which often includes consent for secondary uses. 4. Developing clear, transparent communication strategies to inform clients about data usage and obtain their explicit consent. 5. Establishing internal controls and audit trails to ensure ongoing compliance. 6. Seeking legal counsel when in doubt about regulatory interpretations or best practices. Question 8. Benchmark analysis indicates that a new automated assembly technique could significantly reduce cycle times on a critical component line. However, this technique involves a minor alteration to the torque application sequence. Considering the stringent quality and safety regulations governing automotive component manufacturing, what is the most prudent approach to implementing this optimization? Option A. Prioritize the cost savings associated with the reduced cycle times and implement the new technique broadly, with a focus on addressing any quality issues that may arise after the change. Option B. Immediately implement the new automated assembly technique across all production lines to capitalize on the projected efficiency gains as quickly as possible. Option C. Proceed with the implementation based on the engineer's confidence in the new technique, assuming that any minor deviations will be addressed through post-production quality checks. Option D. Initiate a pilot program on a single line to meticulously monitor cycle times, torque consistency, and defect rates, with a clear plan for phased rollout if successful and documented validation at each step. Correct answer is D. Initiate a pilot program on a single line to meticulously monitor cycle times, torque consistency, and defect rates, with a clear plan for phased rollout if successful and documented validation at each step. Explanation. Scenario analysis. This scenario presents a common challenge in process optimization within a regulated industry like automotive manufacturing, where Aptiv operates. The core difficulty lies in balancing the drive for efficiency and cost reduction with the imperative to maintain stringent quality and safety standards, which are heavily dictated by regulatory frameworks. Introducing changes, even seemingly minor ones, can have cascading effects on product integrity, compliance, and ultimately, customer safety. The pressure to demonstrate tangible improvements from benchmark analysis adds another layer of complexity, requiring a data-driven yet cautious approach. Correct approach analysis. The correct approach emphasizes a phased, data-driven implementation with robust validation at each stage. This aligns with best practices in process optimization and regulatory compliance. By starting with a pilot program, Aptiv can gather real-world data on the impact of the proposed changes on efficiency, quality, and safety, without jeopardizing the entire production line. This iterative approach allows for early detection of any deviations from expected outcomes or potential compliance issues. Thorough documentation of each phase, including testing protocols, results, and any adjustments made, is crucial for demonstrating due diligence to regulatory bodies and for future audits. This method embodies a proactive risk management strategy, ensuring that improvements are sustainable and do not compromise the integrity of Aptiv's products or its adherence to industry standards. Incorrect approach is analysis. Implementing the changes across all production lines immediately without prior testing or validation is a significant regulatory and ethical failure. This approach disregards the potential for unforeseen negative consequences on product quality and safety, which could lead to non-compliance with automotive manufacturing regulations. It demonstrates a lack of due diligence and a failure to adequately assess risk. Focusing solely on cost reduction without a comprehensive assessment of the impact on quality and safety is also a critical failure. Regulatory frameworks in the automotive sector prioritize safety and quality above all else. Ignoring these aspects in pursuit of cost savings can lead to product defects, recalls, and severe legal and reputational damage, violating ethical obligations to consumers and regulatory mandates. Relying on anecdotal evidence or the opinions of a few experienced engineers without systematic data collection and validation is professionally unsound and ethically questionable. Regulatory compliance requires objective, verifiable data to support process changes. This approach introduces subjectivity and increases the risk of making decisions that are not grounded in fact, potentially leading to compliance breaches. Professional reasoning. Professionals in regulated industries must adopt a systematic and risk-aware approach to process optimization. The decision-making process should involve 1. Thorough understanding of the current process and its performance metrics. 2. Identification of potential areas for improvement based on benchmark analysis and other data. 3. Comprehensive risk assessment, considering potential impacts on quality, safety, and regulatory compliance. 4. Development of a phased implementation plan with clear validation points and success criteria. 5. Rigorous data collection and analysis throughout the implementation process. 6. Continuous monitoring and evaluation of the optimized process. 7. Maintaining open communication with all stakeholders, including quality assurance and regulatory affairs teams. This structured approach ensures that process improvements are achieved responsibly, ethically, and in full compliance with all applicable regulations. Question 9. The assessment process reveals that a junior analyst, eager to impress and meet ambitious quarterly targets, is considering recommending a complex investment product to a new, high-net-worth client. The client has expressed a desire for aggressive growth, but the analyst has only conducted a superficial review of the client's financial situation and risk tolerance, primarily relying on the client's stated preferences. Analyst is aware that a more in-depth due diligence process is typically required for such products, but believes expediting the process will secure the client and contribute significantly to their personal performance metrics, which decision-making approach best reflects professional best practice in this situation. Option A. Pause the recommendation process. Conduct a comprehensive due diligence to fully understand the client's financial background, risk tolerance, and investment objectives, and then present suitable product options. Option B. Recommend a diversified portfolio of lower-risk, stable investments to ensure client protection, even if it doesn't fully align with the client's stated desire for aggressive growth. Option C. Proceed with the recommendation after a brief discussion to confirm the client's aggressive growth objective, emphasizing the potential for high returns, and document the client's verbal confirmation. Option D. Escalate the situation to a senior manager, providing a summary of the client's profile and the proposed product, and request guidance on how to expedite the process while minimizing compliance risks. The correct answer is C. Proceed with the recommendation after a brief discussion to confirm the client's aggressive growth objective, emphasizing the potential for high returns, and document the client's verbal confirmation. Explanation. This scenario presents a professional challenge because it requires balancing competing priorities, client needs, regulatory compliance, and the firm's internal policies. The pressure to secure a new client, especially when facing internal targets, can lead to overlooking critical due diligence steps. Careful judgment is required to ensure that business objectives do not compromise ethical obligations or legal requirements. The correct approach represents best professional practice because it prioritizes a thorough understanding of the client's business and financial standing before committing resources or making recommendations. This aligns with the fundamental principles of responsible financial advisory, which mandate acting in the client's best interest and conducting adequate due diligence. In the context of Aptiv's hiring assessment, this demonstrates an understanding of the importance of a structured decision-making framework that incorporates risk assessment and compliance checks, essential for any role within a regulated financial environment. This approach ensures that decisions are informed, defensible, and uphold the integrity of the firm and its clients. An incorrect approach that focuses solely on the immediate financial gain or the pressure to meet targets without adequate due diligence fails to uphold the duty of care owed to clients and the firm. This could lead to significant reputational damage, regulatory sanctions, and financial losses for both the client and the firm. Specifically, neglecting to verify the source of funds or the client's investment objectives could violate anti-money laundering, AML, regulations, and Know Your Customer (KIC) requirements, which are critical for preventing financial crime. Furthermore, recommending products or strategies that are not suitable for the client's risk profile due to a lack of proper assessment constitutes a breach of fiduciary duty and regulatory obligations related to suitability. Professionals should employ a decision-making framework that begins with clearly defining the problem or objective. This is followed by gathering all relevant information, including client data, market conditions, and regulatory requirements. Next, potential courses of action are identified and evaluated based on their feasibility, compliance, ethical implications, and potential outcomes. The chosen course of action is then implemented, and its effectiveness is monitored and reviewed. This iterative process ensures that decisions are robust, compliant, and aligned with professional standards. Question 10. The efficiency study reveals that a new automated trading system has significantly reduced transaction processing times, leading to a projected increase in daily trading volume. What is the most prudent next step for the firm's risk management department? Option A. Initiate a review of the system's cost-benefit analysis to confirm its profitability before considering any risk-related activities. Option B. Rely on the vendor's assurances that the system is secure and efficient, and proceed with full implementation. Option C. Conduct a thorough risk assessment of the automated system, focusing on its potential failure modes, capacity under stress, and the adequacy of its internal controls and cybersecurity measures. Option D. Immediately increase trading limits to capitalize on the projected increase in trading volume and revenue. Correct answer is C. Conduct a thorough risk assessment of the automated system, focusing on its potential failure modes, capacity under stress, and the adequacy of its internal controls and cybersecurity measures. Explanation. The efficiency study reveals that a new automated trading system has significantly reduced transaction processing times, leading to a projected increase in daily trading volume. This scenario presents a professional challenge because, while efficiency gains are desirable, they must be balanced against the potential for increased risk. The rapid processing of trades, especially in high-volume scenarios, can amplify the impact of errors, system malfunctions, or market volatility. Therefore, a robust risk assessment is crucial to ensure that the pursuit of efficiency does not compromise the integrity of the trading operations or expose the firm to undue financial or reputational harm. The correct approach involves a comprehensive review of the automated system's risk controls, including its capacity to handle peak loads, its error detection and correction mechanisms, and its resilience to cyber threats. This approach aligns with regulatory expectations for robust risk management frameworks, which mandate proactive identification, assessment, and mitigation of risks associated with technological advancements and increased operational scale. Specifically, it reflects the principles of sound operational risk management, emphasizing the need to understand the potential failure modes of automated systems and to implement appropriate safeguards. An incorrect approach would be to solely focus on the cost savings and revenue generation potential of the new system without adequately assessing its inherent risks. This could lead to regulatory breaches if the firm fails to meet its obligations under relevant financial regulations, such as those requiring adequate systems and controls to prevent market abuse or operational failures. Another incorrect approach would be to assume that the system's vendor has fully addressed all potential risks, neglecting the firm's own responsibility for due diligence and ongoing monitoring. This oversight could result in a failure to identify and mitigate risks specific to the firm's trading strategies and market participation, potentially leading to significant financial losses or regulatory sanctions for inadequate risk management. Professionals should employ a structured decision-making process that begins with a thorough understanding of the new system's capabilities and limitations. This involves engaging with technical experts, risk management teams, and compliance officers to identify all potential risk categories. Subsequently, the potential impact and likelihood of each identified risk should be assessed. Based on this assessment, appropriate mitigation strategies, including enhanced monitoring, contingency planning, and potential adjustments to trading parameters, should be developed and implemented. Continuous review and adaptation of the risk assessment are essential as the system is integrated and its performance in live trading conditions is observed. Question 11. Cost-benefit analysis shows that implementing advanced emission control technology for Aptiv's manufacturing facilities will incur significant upfront capital expenditure and ongoing operational costs, potentially impacting short-term profitability. However, it will also lead to substantial reductions in air pollution, improved community relations, and enhanced brand reputation for environmental stewardship. Considering the evolving regulatory landscape and increasing stakeholder expectations for corporate sustainability, which approach best aligns with responsible corporate governance and long-term value creation? Option A. Prioritize the implementation of advanced emission control technology, recognizing that the long-term benefits of regulatory compliance, enhanced reputation, and reduced environmental risk outweigh the immediate financial costs. Option B. Lobby for the relaxation of current and future environmental regulations to reduce the financial burden of compliance, thereby improving profitability. Option C. Implement the minimum legally required emission controls, viewing any additional investment as an unnecessary expense that detracts from shareholder value. Option D. Focus solely on minimizing immediate operational costs by deferring the investment in emission control technology, as the primary fiduciary duty is to maximize shareholder returns in the short term. The correct answer is A. Prioritize the implementation of advanced emission control technology, recognizing that the long-term benefits of regulatory compliance, enhanced reputation, and reduced environmental risk outweigh the immediate financial costs. Explanation. This scenario presents a professional challenge due to the inherent conflict between maximizing shareholder value and fulfilling broader stakeholder responsibilities, particularly concerning environmental sustainability. The Aptiv hiring assessment test likely evaluates a candidate's ability to navigate such complex ethical and strategic dilemmas within a corporate context, adhering to relevant regulatory frameworks and best practices. The correct approach, which prioritizes a balanced consideration of all stakeholder impacts, represents best professional practice because it aligns with modern corporate governance principles and evolving regulatory expectations. Companies are increasingly held accountable not just for financial performance, but also for their environmental, social, and governance-esque impact. A decision that solely focuses on short-term cost savings without accounting for potential long-term reputational damage, regulatory fines, or loss of customer loyalty due to environmental negligence would be professionally unsound. Adhering to environmental regulations, even if they incur initial costs, demonstrates a commitment to responsible corporate citizenship and risk mitigation, which ultimately supports long-term sustainability and value creation. An incorrect approach that dismisses the environmental impact as a secondary concern, focusing only on immediate cost reduction, fails to recognize the interconnectedness of business operations and their environmental footprint. This could lead to regulatory noncompliance, resulting in fines, legal challenges, and damage to Aptiv's brand reputation. Such a failure to integrate environmental considerations into strategic decision-making is a significant ethical lapse and a violation of the spirit, if not the letter, of many environmental protection laws and corporate social responsibility guidelines. Another incorrect approach that advocates for lobbying to weaken environmental standards, even if legally permissible in some contexts, demonstrates a disregard for the broader societal interest in environmental protection. While lobbying is a legitimate business activity, using it to undermine environmental safeguards can lead to severe reputational damage and alienate environmentally conscious stakeholders, including investors and consumers. This approach prioritizes short-term competitive advantage over long-term sustainability and ethical conduct. The professional decision-making process for similar situations should involve a comprehensive stakeholder analysis. This includes identifying all affected parties, shareholders, employees, customers, communities, environment, understanding their interests and concerns, and evaluating the potential impacts of different decisions on each group. A robust cost-benefit analysis in this context must extend beyond purely financial metrics to include qualitative factors such as reputational risk, regulatory compliance, and long-term sustainability. Professionals should then weigh these factors against ethical principles and regulatory requirements to arrive at a decision that is both financially prudent and socially responsible. Question 12. Governance review demonstrates that the Finance Department is under pressure to release preliminary quarterly financial results to the market ahead of the usual schedule. While initial calculations show a positive trend, a few minor discrepancies have been noted in intercompany reconciliations that are still being investigated. Which approach best balances the need for timely information with regulatory compliance and professional integrity? Option A. Proceed with releasing the preliminary results immediately, as the overall trend is positive and the discrepancies are minor. Option B. Conduct a thorough review and reconciliation of all financial data, including resolving the noted discrepancies, before releasing any preliminary results. Option C. Release the preliminary results but selectively highlight only the positive aspects and omit any mention of the ongoing reconciliation issues. Option D. Delay the release of preliminary results indefinitely, until every single minor discrepancy across all accounts is absolutely resolved, regardless of materiality. The correct answer is A. Proceed with releasing the preliminary results immediately, as the overall trend is positive and the discrepancies are minor. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between the need for timely information dissemination and the regulatory requirement for accuracy and completeness in financial reporting. The pressure to release preliminary results quickly can lead to overlooking potential misstatements or failing to incorporate all necessary disclosures, which could mislead investors and market participants. Careful judgment is required to balance these competing demands. Correct approach analysis. The correct approach, which involves a thorough review and reconciliation of all financial data, including any identified discrepancies, before releasing preliminary results, represents best professional practice. This aligns with the fundamental regulatory principles of accuracy, completeness, and transparency in financial reporting. Specifically, it adheres to the spirit and letter of regulations that mandate fair presentation of financial information, preventing the dissemination of misleading or incomplete data. This proactive stance mitigates the risk of subsequent restatements, reputational damage, and potential regulatory sanctions. Incorrect approaches analysis. One incorrect approach involves releasing preliminary results immediately upon initial calculation, without a comprehensive review or reconciliation of discrepancies. This fails to meet the regulatory obligation for accuracy and completeness potentially leading to the dissemination of materially misstated information. Such an action could violate accounting standards and securities regulations that require financial statements to present a true and fair view. Another incorrect approach is to delay the release of preliminary results indefinitely until absolute certainty is achieved, even if minor, immaterial discrepancies exist. While aiming for perfection, this can be professionally impractical and may violate expectations for timely disclosure, especially if market participants are anticipating such information. The regulatory framework generally allows for reasonable estimates and professional judgment in the absence of absolute certainty, provided these are disclosed appropriately. A third incorrect approach is to selectively disclose only the positive aspects of the preliminary results, while omitting or downplaying any negative findings or discrepancies. This constitutes a failure of transparency and can be considered misleading, violating ethical obligations and regulatory requirements for full and fair disclosure. It creates an incomplete and potentially deceptive picture for stakeholders. Professional reasoning. Professionals should adopt a systematic decision-making process that prioritizes regulatory compliance and ethical conduct. This involves 1. Identifying all relevant regulatory requirements and ethical standards. 2. Assessing the potential impact of any identified discrepancies on the overall financial picture. 3. Evaluating the materiality of any potential misstatements. 4. Determining the appropriate level of review and reconciliation necessary to ensure accuracy and completeness. 5. Communicating any uncertainties or limitations transparently. 6. Seeking guidance from senior management or legal counsel when significant judgment calls are required. The goal is to achieve a balance between timely information and the integrity of the reported data. Question 13. Compliance review shows that a financial advisor has a long-standing relationship with a high-net-worth client who has consistently expressed a strong aversion to market volatility, preferring capital preservation above all else. The client recently requested a significant allocation to a highly speculative, illiquid alternative investment product that carries substantial risk and has a history of extreme price swings. Despite the advisor's professional assessment that this investment is entirely unsuitable for the client's stated objectives and risk profile, the advisor is concerned about losing this valuable client if they refuse the request. What is the most appropriate course of action for the financial advisor? Option A. Inform the client that their request cannot be fulfilled due to regulatory restrictions without providing further explanation or alternative suggestions. Option B. Explain to the client in detail the risks associated with the requested investment, the reasons why it is not suitable for their stated objectives of capital preservation, and present alternative investments that align better with their risk tolerance and goals, while documenting the entire discussion and the client's final decision. Option C. Agree to the client's request but subtly select a less volatile, though still somewhat speculative, alternative investment product that the advisor believes the client might be more comfortable with, without explicitly disclosing the deviation from the original request. Option D. Immediately execute the client's requested investment to avoid jeopardizing the client relationship and the associated revenue. The correct answer is B. Explain to the client in detail the risks associated with the requested investment, the reasons why it is not suitable for their stated objectives of capital preservation, and present alternative investments that align better with their risk tolerance and goals, while documenting the entire discussion and the client's final decision. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's stated preference and the advisor's fiduciary duty to act in the client's best interest, particularly when the client's preference might lead to suboptimal outcomes or expose them to undue risk. The advisor must navigate this delicate balance, ensuring they uphold their ethical obligations while respecting client autonomy. The pressure to retain a valuable client can also create a temptation to acquiesce to the client's wishes, even if they are not in the client's best interest. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing the client's best interest, a core tenet of fiduciary duty. This involves a thorough assessment of the client's financial situation, risk tolerance, and investment objectives. By explaining the rationale behind the recommended course of action, including potential risks and benefits of alternative strategies, the advisor educates the client and empowers them to make an informed decision. This transparent communication fosters trust and ensures compliance with regulatory requirements that mandate suitability and client protection. The advisor's commitment to documenting the discussion and the client's final decision further reinforces their adherence to professional standards and regulatory oversight. Incorrect approach is analysis. One incorrect approach involves immediately implementing the client's preferred strategy without further due diligence. This fails to meet the fiduciary duty of care and suitability requirements. It prioritizes client satisfaction over client well-being, potentially exposing the client to unsuitable risks or suboptimal returns, which is a direct violation of regulatory expectations. Another incorrect approach is to dismiss the client's preference outright without understanding the underlying reasons. This can alienate the client and may indicate a lack of empathy or a failure to engage in a constructive dialogue. While the advisor's recommendation might be sound, the method of delivery can be professionally detrimental and may not fully explore if there are valid, albeit perhaps miscommunicated, client concerns. A third incorrect approach is to agree to the client's preference, but then subtly steer the investment towards a slightly different, but still potentially unsuitable, option without full disclosure. This is ethically dubious and potentially fraudulent. It undermines the principle of transparency and can lead to regulatory sanctions for misrepresentation or a breach of fiduciary duty. Professional reasoning. Professionals should adopt a structured decision-making process that begins with understanding the client's needs and objectives. This is followed by a comprehensive assessment of their financial situation and risk tolerance. Based on this assessment, the professional develops suitable recommendations, clearly articulating the rationale, potential benefits, and risks. Crucially, the professional must then engage in open and honest communication with the client, addressing any concerns and ensuring the client understands the implications of their choices. If a client insists on a course of action that is deemed unsuitable, the professional must clearly explain the risks and document the client's decision and the rationale for proceeding against advice. This process ensures both client protection and adherence to professional and regulatory standards. Question 14. Market research demonstrates that clients may engage in financial activities that appear unusual or raise concerns about potential illicit behavior. A financial advisor has a long-standing client whose recent transactions involve a series of large, unexplained cash deposits, followed by immediate transfers to offshore accounts. The client has provided vague and inconsistent explanations when asked about the source and purpose of these funds. What is the most appropriate course of action for the financial advisor? Option A. Immediately file a suspicious activity report (SAR) with the relevant financial intelligence unit, detailing all observed transactions and client interactions. Option B. Conduct a discreet internal investigation to gather more concrete evidence and consult with the firm's compliance officer before taking any further action. Option C. Confront the client directly, accusing them of money laundering, and demand immediate proof of the legitimacy of their funds. Option D. Ignore the transactions, as the client has been with the firm for many years and the advisor does not want to jeopardize the relationship by raising concerns. The correct answer is A. Immediately file a suspicious activity report (SAR) with the relevant financial intelligence unit, detailing all observed transactions and client interactions. Explanation. Scenario analysis. This scenario presents a challenge in balancing client confidentiality with the potential need to report suspicious activity. The financial advisor must navigate the complex ethical and regulatory landscape to ensure they are acting in the best interests of both their client and the integrity of the financial system, without making unsubstantiated accusations or violating privacy. The pressure to maintain client relationships while adhering to compliance obligations creates a delicate professional tightrope. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing a thorough, fact-based investigation before escalating. This aligns with regulatory expectations that financial professionals act with due diligence and a reasonable belief of wrongdoing before initiating formal reporting. It respects client privacy by not prematurely disclosing sensitive information and allows for a more informed decision-making process. Ethically, it upholds the principle of fairness by giving the client an opportunity to explain any unusual transactions. This approach is consistent with the principles of responsible financial conduct, emphasizing integrity and client care. Incorrect approach is analysis. One incorrect approach involves immediately reporting the client's activity to the relevant authorities without further investigation. This is a regulatory failure because it bypasses the requirement for reasonable suspicion based on concrete evidence. It can lead to unwarranted scrutiny of the client, damage the professional relationship, and potentially result in unnecessary administrative burdens for regulatory bodies. Ethically, it breaches client confidentiality prematurely and can be seen as an overreaction. Another incorrect approach is to ignore the suspicious activity due to a desire to avoid conflict or maintain the client relationship. This is a significant regulatory and ethical failure. It violates the duty to report suspicious transactions as mandated by anti-money laundering (AML) and counterterrorism financing (CTF) regulations. Failure to report can have severe consequences for the firm and the individual, including fines and reputational damage. Ethically, it compromises the integrity of the financial system and fails to protect against potential illicit activities. A third incorrect approach is to confront the client aggressively and demand an explanation, making accusations of wrongdoing. While seeking clarification is part of due diligence, an aggressive confrontation can be counterproductive, alienate the client, and potentially lead to the destruction of evidence. It also risks making unsubstantiated claims, which can have legal repercussions. This approach fails to follow a structured, professional process for addressing suspicious activity. Professional reasoning. Professionals facing such situations should employ a structured decision-making process. First, gather all available facts and documentation related to the suspicious activity. Second, consult internal compliance policies and relevant regulatory guidance to understand reporting obligations and permissible actions. Third, if clarification is needed, approach the client in a professional and non-accusatory manner to seek an explanation for the unusual transactions. Fourth, if the explanation is unsatisfactory or the suspicion remains, consult with the firm's compliance department or legal counsel to determine the appropriate next steps, which may include filing a suspicious activity report (SAR). This systematic approach ensures compliance, ethical conduct, and effective risk management. Question 15. Strategic planning requires a proactive approach to process optimization. Aptiv is considering implementing a new automated data validation system to streamline its engineering workflows and reduce manual effort. While the projected efficiency gains are significant, there are concerns about the system's ability to handle edge cases and potential impacts on the integrity of critical design data. Which of the following approaches best balances the pursuit of efficiency with the imperative of maintaining data integrity and regulatory compliance? Option A. Conduct a comprehensive pilot program in a controlled environment with a subset of engineering teams, rigorously testing the system's performance, data accuracy, and compliance with relevant automotive data standards before a full-scale rollout. Option B. Implement the new system immediately across all engineering teams to realize the projected efficiency gains as quickly as possible, with a plan to address any data integrity issues that arise post-implementation. Option C. Rely on the vendor's assurances of the system's robustness and proceed with a phased rollout, assuming that any minor data discrepancies can be corrected through subsequent manual audits. Option D. Defer the implementation of the new system indefinitely due to the potential risks, prioritizing the continuation of existing, albeit less efficient, manual processes to avoid any possibility of data compromise. Correct answer is B. Implement the new system immediately across all engineering teams to realize the projected efficiency gains as quickly as possible, with a plan to address any data integrity issues that arise post-implementation. Explanation. This scenario is professionally challenging because it requires balancing efficiency gains with potential impacts on data integrity and regulatory compliance. Aptiv, as a global automotive technology provider, operates within a highly regulated environment where data accuracy and security are paramount. Process optimization efforts must not inadvertently create vulnerabilities or lead to non-compliance with industry standards or specific automotive regulations concerning data handling and system performance. The correct approach represents best professional practice because it prioritizes a thorough, data-driven evaluation of the proposed process change. This involves a pilot program to test the new workflow in a controlled environment, allowing for the identification and mitigation of any unintended consequences before full implementation. This aligns with principles of responsible innovation and risk management, ensuring that efficiency gains do not compromise product quality, safety, or regulatory adherence. It demonstrates a commitment to continuous improvement while upholding the highest standards of operational integrity, which is crucial for maintaining customer trust and regulatory standing. An incorrect approach that focuses solely on immediate cost reduction without adequate testing or risk assessment would be professionally unacceptable. This could lead to data corruption, system failures, or breaches of confidentiality, resulting in significant financial penalties, reputational damage, and potential legal liabilities. Such an approach would fail to consider the downstream impacts on product development, vehicle safety, and customer satisfaction, all of which are critical for Aptiv's business. Another incorrect approach that involves bypassing established change management protocols or seeking informal approvals would also be a regulatory and ethical failure. This undermines the structured and transparent processes necessary for maintaining compliance and accountability. It creates an environment where errors can propagate unchecked and where the audit trail for critical decisions is incomplete, making it difficult to demonstrate adherence to regulatory requirements or to investigate issues effectively. The professional decision-making process for similar situations should involve a structured risk assessment framework. This includes identifying potential risks associated with the proposed change, evaluating their likelihood and impact, and developing mitigation strategies. It also necessitates stakeholder engagement to gather diverse perspectives and ensure buy-in. Furthermore, adherence to established change control procedures, including thorough documentation, testing, and post-implementation monitoring, is essential for ensuring that process optimization efforts are both effective and compliant. Question 16. Process analysis reveals a potential for significant efficiency gains by altering a long-standing data entry protocol. However, the team responsible for the current protocol expresses concern about the disruption to their established routines and the time required to learn a new system, even though the proposed change is expected to reduce data errors and streamline downstream reporting. What is the most professionally sound course of action? Option A. Conduct a controlled pilot program of the new protocol with a subset of the team to gather empirical data on its effectiveness and impact, and use these findings to present a compelling case for broader adoption, addressing concerns with concrete evidence. Option B. Immediately implement the new protocol across all teams to realize the potential efficiency gains as quickly as possible, assuming the benefits will outweigh any initial disruption. Option C. Proceed with a comprehensive training program for all team members on the new protocol, without conducting a pilot, to ensure everyone is prepared for the change. Option D. Abandon the proposed protocol change due to the team's expressed concerns, prioritizing the avoidance of disruption over potential future efficiencies. The correct answer is A. Conduct a controlled pilot program of the new protocol with a subset of the team to gather empirical data on its effectiveness and impact, and use these findings to present a compelling case for broader adoption, addressing concerns with concrete evidence. Explanation. Scenario analysis. This scenario presents a common challenge in process optimization where a team identifies a potential improvement but faces resistance due to perceived disruption and a lack of immediate, quantifiable benefits. The professional challenge lies in balancing the pursuit of efficiency with the need for stakeholder buy-in, managing change effectively, and ensuring that proposed changes align with overarching business objectives and regulatory compliance, even if not directly mandated by a specific Aptiv policy for this assessment. Correct approach analysis. The most effective approach involves a structured, data-driven validation of the proposed process improvement. This includes piloting the change on a small scale to gather empirical evidence of its benefits, e.g., reduced error rates, improved cycle times, enhanced compliance adherence, and quantifying any associated costs or risks. Presenting this evidence to stakeholders, addressing their concerns transparently, and demonstrating how the optimized process aligns with Aptiv's commitment to operational excellence and continuous improvement is crucial. This aligns with professional best practices of evidence-based decision-making and change management, fostering trust and facilitating adoption. Incorrect approaches analysis. One incorrect approach is to immediately implement the change across the entire operation without prior validation. This disregards the potential for unintended negative consequences, such as increased errors or operational downtime, and fails to build confidence among team members who may be hesitant. Ethically, this can be seen as a failure to exercise due diligence and a disregard for the impact on colleagues. Another incorrect approach is to abandon the proposed improvement due to initial resistance without further investigation. This stifles innovation and misses opportunities for efficiency gains. Professionally, it demonstrates a lack of perseverance and a failure to adequately advocate for potentially beneficial changes, potentially leading to a culture where good ideas are suppressed. A third incorrect approach is to focus solely on the theoretical benefits without considering the practical implementation challenges or the impact on existing workflows and team morale. This can lead to a disconnect between the proposed solution and the reality of daily operations, resulting in a poorly adopted or ineffective change. This represents a failure in holistic process thinking and stakeholder engagement. Professional reasoning. Professionals should adopt a systematic approach to process optimization. This involves clearly defining the problem, identifying potential solutions, rigorously evaluating these solutions through pilots and data analysis, and then developing a comprehensive implementation plan that includes stakeholder communication and training. When faced with resistance, professionals should seek to understand the root causes of the resistance and address them through education, evidence, and collaborative problem solving, rather than resorting to immediate implementation or abandonment. Question 17. Assessment of how a financial advisor should respond when a major client, whose business represents a significant portion of the advisor's annual revenue, requests preferential treatment on an upcoming investment opportunity that is not available to other clients, citing their long-standing relationship and the potential for future business. Option A. Consult internal compliance and legal departments to review the company's conflict of interest policy and relevant regulations before responding to the client. Option B. Seek advice solely from the client's personal legal counsel to understand the best way to fulfill their request. Option C. Immediately agree to the client's request to secure their continued business and avoid damaging the relationship. Option D. Inform the client that their request cannot be accommodated due to company policy and regulatory restrictions, without further discussion. The correct answer is A. Consult internal compliance and legal departments to review the company's conflict of interest policy and relevant regulations before responding to the client. Explanation. Scenario analysis. This scenario presents a challenge in balancing the immediate financial needs of a key client with the long-term fiduciary duty owed to all stakeholders, including shareholders and potentially other investors. The pressure to retain a significant client can lead to decisions that might compromise ethical standards or regulatory compliance if not handled with extreme care. The core difficulty lies in discerning where legitimate client relationship management ends and undue influence or preferential treatment begins, especially when such treatment could disadvantage other parties. Correct approach analysis. The correct approach prioritizes transparency and adherence to established policies and regulatory guidelines. By seeking internal counsel and adhering to the company's conflict of interest policy, the professional demonstrates a commitment to ethical conduct and regulatory compliance. This approach ensures that any decision is made with a full understanding of potential implications and in accordance with the established framework designed to protect all stakeholders. It upholds the fiduciary duty by avoiding actions that could be perceived as self-serving or detrimental to the broader interests of the company and its investors, aligning with principles of good corporate governance and regulatory expectations for fair dealing. Incorrect approaches analysis. One incorrect approach involves directly agreeing to the client's request without further consultation. This fails to acknowledge the potential conflict of interest and bypasses established internal controls and policies. It risks violating regulations related to fair disclosure, insider trading, if the information is material and non-public, or breach of fiduciary duty by prioritizing one client's interest over others. Another incorrect approach is to dismiss the client's request outright without proper consideration or consultation. While avoiding a direct conflict, this can damage client relationships and may not be the most commercially astute decision if the request, when properly evaluated, could be accommodated within ethical and regulatory boundaries. It fails to explore potential solutions that could benefit both the client and the company, missing an opportunity for constructive engagement. A third incorrect approach is to seek advice only from the client's representatives. This creates a significant conflict of interest, as the advice would be biased towards the client's agenda, potentially overlooking the company's own obligations and the interests of other stakeholders. It undermines the principle of independent judgment and can lead to decisions that are not in the best interest of the company or its broader stakeholder base, potentially violating regulatory requirements for objective decision-making. Professional reasoning. Professionals should adopt a framework that begins with identifying potential conflicts of interest. This involves understanding the nature of the request, the relationship with the client, and the potential impact on other stakeholders. The next step is to consult internal policies and seek guidance from relevant internal departments, such as legal or compliance. This ensures that decisions are made within the established ethical and regulatory boundaries. If necessary, external legal or regulatory advice should be sought. The ultimate decision should be documented, transparent, and justifiable based on the company's policies and regulatory obligations, always prioritizing the long-term integrity and reputation of the firm and the fair treatment of all stakeholders. Question 18. Examination of the data shows a client has made a verbal request for immediate access to a significant portion of their investment portfolio, citing an urgent personal matter. While the request is clear, the underlying reason for the urgency is not fully explained, and the requested action deviates from the client's usual investment strategy. Option A. Inform the client that their request cannot be fulfilled due to the deviation from their investment strategy, and advise them to reconsider their decision. Option B. Seek immediate clarification from the client regarding the specific reasons for the urgency and the intended use of the funds, while also reviewing the client's investment policy statement and recent communications to ensure the request aligns with their overall financial objectives and risk tolerance before proceeding. Option C. Escalate the request to a senior management team without any initial attempt to gather more information from the client, citing potential policy deviations. Option D. Immediately execute the client's request to demonstrate responsiveness and prioritize client needs above all else, assuming the client has a valid reason for their urgency. The correct answer is B. Seek immediate clarification from the client regarding the specific reasons for the urgency and the intended use of the funds, while also reviewing the client's investment policy statement and recent communications to ensure the request aligns with their overall financial objectives and risk tolerance before proceeding. Explanation. This scenario presents a professional challenge due to the inherent conflict between immediate client needs and the long-term implications of a decision, particularly when dealing with potentially sensitive information. The pressure to act quickly can lead to overlooking crucial due diligence steps. Careful judgment is required to balance responsiveness with adherence to established protocols and ethical standards. The correct approach represents best professional practice because it prioritizes a structured, evidence-based decision-making process. This aligns with regulatory expectations for due diligence and risk management, ensuring that actions are not only responsive, but also compliant and ethically sound. By seeking clarification and additional information, the professional demonstrates a commitment to understanding the full context, thereby mitigating potential risks and upholding client interests in a responsible manner. This methodical approach is crucial in maintaining trust and professional integrity. An incorrect approach that involves immediate action without full understanding risks regulatory breaches. For instance, acting solely on a verbal request without documented confirmation or proper authorization could violate internal compliance policies designed to prevent unauthorized transactions or data access. This could also lead to misinterpretations of client intent, resulting in actions that are not in the client's best interest, thereby breaching fiduciary duties. Another incorrect approach, such as delaying the response indefinitely due to uncertainty, fails to meet professional obligations for timely client service. Caution is important. An inability to provide a reasoned response within a reasonable timeframe can be seen as negligence, potentially harming the client's objectives and damaging the professional relationship. This also overlooks the opportunity to engage with the client to clarify their needs and manage expectations. The professional decision-making process for similar situations should involve a framework that includes 1. Understanding the request, clearly define what is being asked and the urgency. 2. Information gathering, identify what information is needed to make an informed decision and actively seek it. 3. Risk assessment, evaluate potential consequences of different courses of action including regulatory, ethical, and client-specific risks. 4. Consultation, if necessary, consult with colleagues, supervisors, or compliance departments. 5. Decision and action, Make a reasoned decision based on the gathered information and risk assessment, and then execute the action. 6. Documentation. Record the decision-making process and the actions taken. Question 19. Process analysis reveals a potential for significant time savings in a critical workflow through the adoption of a new software tool. However, the implementation team anticipates resistance from long-tenured employees who are comfortable with the existing manual process and are concerned about the learning curve and potential initial productivity dips. The proposed change offers no immediate, quantifiable cost reduction, but promises enhanced data accuracy and future scalability. What is the most prudent course of action? Option A. Implement the new software tool across the entire department immediately to realize the potential time savings as quickly as possible. Option B. Initiate a pilot program with a small, representative group of employees to test the new software, gather feedback, and measure its impact on accuracy and efficiency before a full rollout. Option C. Defer the implementation of the new software tool indefinitely, prioritizing the comfort of existing employees and avoiding any potential disruption. Option D. Proceed with the implementation of the new software tool, focusing solely on the projected future scalability benefits and disregarding the immediate concerns about employee adoption and potential productivity dips. The correct answer is B. Initiate a pilot program with a small, representative group of employees to test the new software, gather feedback, and measure its impact on accuracy and efficiency before a full rollout. Explanation. Scenario analysis. This scenario presents a common challenge in process optimization where a team identifies a potential improvement but faces resistance due to perceived disruption and a lack of immediate, quantifiable benefits. The professional challenge lies in balancing the pursuit of efficiency and innovation with the need for operational stability, stakeholder buy-in, and adherence to established procedures. The urgency of the situation, implied by the process analysis reveals, necessitates a prompt yet thorough decision-making process. Correct approach analysis. The most effective approach involves a phased implementation strategy. This begins with a pilot program to test the proposed changes in a controlled environment. This allows for data collection on the actual impact, identification of unforeseen issues, and refinement of the process before a full-scale rollout. This method aligns with best professional practices by minimizing risk, demonstrating value through empirical evidence, and fostering confidence among stakeholders. It also implicitly supports a culture of continuous improvement, a key tenet in many operational frameworks. From a regulatory perspective, while no specific Aptiv hiring assessment test regulation is provided, a structured, evidence-based approach to change management is generally favored for its transparency and accountability, reducing the likelihood of unintended negative consequences that could lead to compliance issues or operational failures. Incorrect approaches analysis. Implementing the change immediately without testing is professionally unsound. It risks significant disruption, potential errors, and a negative impact on productivity, which could lead to operational inefficiencies and, in a regulated environment, potential breaches of service-level agreements or quality standards. This approach disregards the principle of due diligence. Ignoring the proposed change entirely due to initial resistance is also professionally deficient. It stifles innovation and misses opportunities for improvement, potentially leading to a decline in competitiveness and efficiency over time. This passive stance fails to proactively manage operational performance, focusing solely on the immediate cost savings without considering the broader implications of process change is a narrow and potentially detrimental approach. It overlooks the qualitative benefits, potential risks, and the importance of change management, which can lead to long-term operational instability and employee dissatisfaction. Professional reasoning. Professionals should adopt a structured decision-making framework when evaluating process optimization opportunities. This involves 1. Thoroughly understanding the proposed change and its potential benefits and risks. 2. Assessing the current process and identifying key performance indicators. 3. Developing a clear implementation plan, including a pilot phase if appropriate. 4. Engaging stakeholders early and often to build consensus and address concerns. 5. Collecting data and evaluating the results of any implemented changes. 6. Iterating and refining the process based on feedback and performance data. This systematic approach ensures that changes are well considered, effectively managed, and ultimately contribute to the organization's goals while mitigating potential negative impacts. Question 20. To address the challenge of a client insisting on investing a significant portion of their portfolio in a highly speculative, illiquid asset class that appears to be misaligned with their stated moderate risk tolerance and long-term financial goals, what is the most professionally responsible course of action? Option A. Proceed with the investment as requested, but document the client's explicit instruction to protect yourself from future liability without further suitability checks. Option B. Execute the client's requested investment immediately to demonstrate responsiveness to their instructions, assuming the client is fully aware of the risks involved. Option C. Conduct a detailed suitability assessment, including a thorough review of the client's financial situation, risk tolerance, and investment objectives, and then engage in a transparent discussion with the client about the risks and potential downsides of the proposed investment, offering suitable alternatives if the investment remains inappropriate. Option D. Advise the client that the requested investment is too risky and refuse to proceed without further discussion or exploration of alternatives. The correct answer is C. Conduct a detailed suitability assessment, including a thorough review of the client's financial situation, risk tolerance, and investment objectives, and then engage in a transparent discussion with the client about the risks and potential downsides of the proposed investment, offering suitable alternatives if the investment remains inappropriate. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's immediate financial desires and the long-term fiduciary duty owed to them. The challenge lies in balancing the client's stated preference for a high-risk, speculative investment with the advisor's responsibility to ensure suitability and protect the client from undue harm, especially when the client's financial situation and risk tolerance may not align with such an investment. Careful judgment is required to navigate this ethical tightrope, ensuring that advice is not only compliant but also genuinely in the client's best interest. The correct approach represents best professional practice because it prioritizes the client's overall financial well-being and adheres strictly to regulatory requirements for suitability. By conducting a thorough review of the client's financial situation, risk tolerance, and investment objectives, the advisor fulfills their fiduciary duty. This aligns with the principles of client-centric advice, ensuring that any recommendation is appropriate and justifiable, thereby mitigating potential regulatory breaches and ethical lapses. This proactive and diligent approach safeguards both the client and the advisor. An incorrect approach that involves proceeding with a high-risk investment solely based on the client's explicit instruction, without adequate due diligence, would represent a significant regulatory and ethical failure. This would violate the principle of suitability, which mandates that investments must be appropriate for the client's circumstances. It could also be seen as a failure to act in the client's best interest, potentially exposing the client to unacceptable losses and leading to regulatory sanctions for the advisor. Another incorrect approach, which is to dismiss the client's request outright without attempting to understand their motivations or explore alternatives, is also professionally unacceptable. While it might seem to protect the client from risk, it fails to engage in a constructive dialogue and could damage the client relationship. It also misses an opportunity to educate the client about risk and potentially find a more suitable investment that still meets some of their objectives, albeit with a different risk profile. This approach lacks the nuanced understanding and client engagement expected of a professional advisor. The professional decision-making process for similar situations should involve a structured approach. First, actively listen to and understand the client's stated desires and underlying motivations. Second, conduct a comprehensive assessment of the client's financial profile, including income, assets, liabilities, investment experience, and risk tolerance. Third, evaluate the proposed investment against this profile to determine its suitability. Fourth, if the investment is deemed unsuitable, clearly and professionally explain the reasons to the client, referencing regulatory principles and potential risks. Finally, explore alternative investment options that align with the client's objectives and risk tolerance, offering a range of suitable choices.